Welcome back. Well, let's welcome on board the management of Tech Pipes to get a sense as to how the business is really doing. At this point of time, we have Mr. Anish Bansal, the CEO at Tech Pipes, joining us on the show. Hi, sir. Good to be speaking with you. And first up, best wishes for the New Year's. And the question to you is, has the New Year started on a positive note in terms of the demand momentum that you're seeing on the ground, in terms of the update that we got from Q3? What's the sense of how the next 12 months are likely to pan out for you?
Good afternoon, Anisha and Ajay. Thanks for inviting me, and Happy New Year to you and all the viewers of ET Now. So the new year has started on a positive note. In Q3, the company has reported a 9% sales volume growth, and 9-month sales volume growth has been around 15%. So that has poised well, and this was despite the declining steel prices globally. And even then, the company could manage a volume growth, and steel prices being bottomed out now, and I think Q4 will be really phenomenal for the company.
Anish, this is clearly a very good number to talk about. It appears that things clearly are turning around, and you guys have taken a lot of steps around it. I want to understand slightly big picture view. We've been speaking to JTL, we spoke to MAN Industries recently, and the sense we are getting is that this entire space is getting a lot of tailwinds from the industry. But where does your capacities lie right now? Current capacities versus how much capacity are you adding over the next 4 quarters? Because you will be able to capture the tailwinds only when you have spare capacities.
Right, Ajay. So since we are nearing our full capacity utilization as of now, and we are adding another 1.5 lakh tons, which will be commissioned in Sanand in Q4. And another 2.5 lakh tons in FY25. So cumulative, our total capacity will be 1 million tons from 5.8 lakh tons. So that will give us a good headroom for the volume expansion for next 1 to 2 years.
When you say good volume expansion, what do you mean by that? Is it going to be high teen, 15 to 20%? Is it going to be low single digit? Give us some color. Then also, what margins will they come in at? Because right now the margin profile is quite weak, I believe, low single digits.
So Nisha, the volume expansion will be almost 25% where we are right now. And we are adding more value-added products in the total basket, and our share of value-added products will rise from 30% to 50% in the next 4 to 6 of good volume and profitable growth for the company.
Anish, so before we let you go, I want to understand that, say, we are just winding up FY24. So, let's not talk about the year end, but over the next 2 years, what kind of revenue number are you aiming at with improved margin profile?
Okay, I think we'll try and reconnect that line. We seem to have him on a bit of a scratchy line.
Anish,
but because
we have you with us now? Can you hear us?
Yes.
Essentially, what I was asking you was that, this good volume growth, how much are you talking about this being reflected in your top line number, say by 26 ending? Also, where would your margin be at that number?
So I'm expecting our top line to be around 5,000 crores by FY25. And the bottom line, our EBITDA should be in excess of 250 crores.
A top line of 5,000 crores and a bottom line of for a bottom line of 450 crore by FY25 is what you're penciling in.
50 crores EBITDA.
Okay, EBITDA. Okay. Fair enough. Thanks so much for making time and speaking with Anish. These were largely the questions for you that we had at this point of time. We'd love to chat with you more later.